So the president's basic analysis of this was, among other things, it means the Fed should cut interest rates some more, no matter what they were. That's what he would say, right? Doug Flynn joins us, co-founder at Flynn Zito Capital Management. I want to show something, though, on the telestrator for a moment. Inflation has been stubborn. I think that's the best way to describe it, because is it down from where it was in the Biden era? Of course. And even from earlier this year, it started to come down. And then was the Liberation Day moment when the tariffs came in. Then it starts to go back up the way, and now we're kind of settled in this place where it is now. Of course, we didn't have data with the shutdown, but last couple of months, and we're in the high 2.7. Yeah. What's the perspective on that? What does it mean?
Yeah, it seems like it's moderating again and not reaccelerating, which was one of the things that we wanted to watch for. And the core number coming in today, which was below expectations, is really important because it kind of shows that the price pressures are definitely easing. And the trend here is what matters, right? You're gradually moving downward. But I think one of the key takeaways is if you look inside, one of the key drivers of inflation the last couple of years has been housing and rents. And so now the last 3 months, if you look year over year, that's running at a 2.2% annualized inflation rate, which is finally below the core numbers and close to that Fed 2% target number. So that's a really good sign, because that's part of the reason why it's been so stubborn. And so perhaps that's easing, and that makes it easier for inflation to be a lower number. Now, of course, that doesn't mean you're going to get rate cuts, contrary to what the president said. It's the exact opposite of that, really, is what's happening.
Right. And, what do you make of that drama over at the Fed? It was interesting. I think some people, even some conservatives or Republicans, their analysis of this was, why are you going after Powell with this investigation of the Department of Justice at this point when he's on his way out? Because this might make him stay, if anything, as a governor, and it might make your people tough to get confirmed.
Yeah. To me, this is really more about the leverage rather than the obsession with getting him out. I mean, he definitely wants lower interest rates. And, to me, it's like, look, he can't be fired. The rate policy is not really going to change, even if he puts his own person in there. It's not that easy to change it. Legally, this is pretty weak. And so I think without a clear end game to this, to me, this is just one of those things that when the headlines go away, I think he kind of loses interest and moves on to something else. So we're all making it a much bigger deal than it really is, I think, especially if we kind of look away and there's other things that are going on. It's not materially going to change much at all with respect to rate policy, and that's ultimately what we're always talking about.
One thing that could be going on really soon is a decision from the Supreme Court on the president's tariffs, which he did talk about in his Detroit speech. Here's what the president said.
You have the Supreme Court now going to rule on whether or not we can use tariffs. Can you believe this? We'll figure something out if we don't win, but we should win.
He said in another statement, we're screwed if it goes against us, meaning him. And then I know there's some financial types, I don't know if you're one of them, that think maybe the opposite is true, that it could help the economy or could help the market if the president loses. What do you think?
What I think is this is going to cause massive refunds if it does get overturned, which the lower courts have already said this is illegal. So if they ratify that, and you're going to have all of these companies and import companies scrambling to get all this money back. Where does it come from? Like the whole market itself, overall the stock market too, is looking at this and saying, there's going to be some volatility because of the uncertainty of the unraveling. What exactly is it going to look like? Are we going to have to borrow this money to do the refunds if that tariff revenue money has now been spent elsewhere? So to me, it's more about, the uncertainty until we get the clarity. One way or the other, whatever it is, the market and people and investors can deal with it. We just want to know what it is.
Uncertainty. That's the only thing that's certain is we'll be uncertain. Thank you, Doug. Quick break.